Okay, traders, so we're going to take a look at this fantastic new extension. I think technically it's called a widget, okay, on our Logix trader, but developed here so that you can use it on whatever browser you're using. And what it allows you to do is calculate your trade size very quickly with a pop-up on your screen. So you can be looking at your chart, but if you're trading, say, two different instruments, right now the US dollar, it's on fire, it's going up. So we're looking at short positions to diversify on both, say, the euro dollar and the Aussie dollar. So we want to make sure that when it comes to the market moving, we can quickly calculate and make sure that we've got the right position size for the amount of money we've got in our account in line with what we're willing to risk as per our trading plan. So to make sure we get those two different instruments calculated so the risk is exactly the same and we get exactly the right trade size for both trades and we know what our margin is. Let's jump in and take a look.
Okay, traders, so we've got a strong US dollar at the moment. So I'm looking at weakness in both the euro against the US dollar and of course the Aussie against the US dollar. So for those traders using our ASIC or Australian license, we need to work out what our different margin requirements might be. And because of the prices are different on both instruments, we can get a better idea of what our risk is. So one of the tools you can use, I'll just double click on it up here. It's the FinLogix economic calendar, and it's an extension you can just have in your browser. Okay, so you can see here, it gives us any news coming out, which can be helpful to have in front of your eyes just as a pop-up. But today it's all about calculators. So let's go in and have a look. I want to try and calculate a position size very quickly. So I can do that. So first of all, what's my account balance? Well, we've got, say, $5,000 in the account and it's in Aussie dollars. Okay, and we're going to risk, for example, 2% of our total balance on each trade as per our trading strategy or trading plan. And remember, you can adjust that to suit your trading strategy or your trading plan. So we're using the euro against US dollar. Let's say we want to get in at 106.40. It's looking very weak, for example. And because it's in such a strong downtrend with no significant news, maybe I'll click on switch to pips, and I'd be willing to risk 100 pips on this trade. So now what I want to know is what trade size to put in to press the sell button on. So you can see here, it's telling me it's 61,000, or in the old language for MetaTrader clients, it'd be 0.61, but 61,565, and I'd be risking therefore $100 on this particular trade. So it makes it very simple to utilize it, and I can simply go in and type in 61,000. I might even round it up at 62,000 and press sell. And that trade would go on, and I can then set my 100 pip stop loss very simply, and I can make sure I'm in control of what my risk reward is and how much I'm risking on each trade. The other thing we can do as well is if I bring back, double click, and bring back this widget, if I go to calculators, just for future reference, if I'm now wanting to put on an Aussie trade, I can click on position size and do exactly the same thing. So let's move the chart over and let's go calculator. Position size. So I just do the same thing. I make sure it's in Aussie. We'll say, for example, the last trade was successful. I now have $5,100, say, in my account. I'm still risking 2%, so I maintain that risk. I simply change it to Aussie against US dollar. I'm looking for a sell. We'll leave that as the open price. And again, we're going to be risking, in this case, 100 pips. So I can simply press calculate, and there it is there. So it's telling me to do a larger trade size. Why? Because the Aussie is cheaper and it's in Aussie against US dollar compared to that euro. So I can now do 102,000 or just over a full lot okay, risking a very similar amount. So it allows me to adjust my trade sizes so that they maintain the same across different instruments based on my risk reward. The final thing we'll take a look at is your margin. And again, you would just come in here and type in 102,000. Okay, so 102,000. So if I open up that widget again, and I look at, say, calculators, but this time the margin requirement. This time I know on both trades, if I change it to Aussie, and I know here in Australia, I have leverage at 30-1 on these major currencies. And I'm looking at the trade size. It allows me to gauge it. So that Aussie trade, we were looking at about 100,000, 102,000, but for this euro, it was 62,000 approximately. And I can calculate it. Now, to put on the euro dollar trade, okay, to risk the same amount, I need to have 3,356.43 in my account, which is doable with that 5,000 balance, okay? And as well as when I add on top of that, the $100 that I would have been risking. So I know I could put that Aussie trade on, but let's say I want to add, the euro dollar trade, but if I want to add the Aussie trade to it, and that was 100,000, 102 to be precise. I can then calculate that. And suddenly I notice that I'll need $3,400, okay, to be held as margin. So I'll need to deposit, if I want to take both those trades, more money into my account. Okay, and that's just something to keep in mind when you start to see opportunities, when you start to see, say, this US dollar moving and you want to diversify it, you therefore may need to change the size of your trade to suit the amount of margin that's required, especially by our Aussie clients using under our ASIC license. All right, guys, this calculator makes it really simple. So in this current circumstance, I would then have to choose one over the other, or I would have to reduce the trade size that I'm doing to accommodate, which can be done very simply. I could say, what if I risked half this trade size in both? So I would say, okay, what about 50,000 and calculate, and suddenly, okay, great. So that's 1,666.67. And then if I calculated the euro, I suddenly might be able to take both trades, but I want to be able to do it in front of my screen very quickly, because right now the markets are certainly moving and this US dollar is strong, and it allows us to make sure we're still in control of our risk reward and what our margin requirements might be. Okay, thanks everybody.